Well, investors are eating up Chipotle's planned expansion into the Middle East. The fast casual chain has signed its first ever franchise deal to sell its burritos in the region as it looks to grow beyond the U.S., Canada, and Europe. Peter Saleh, BTIG Managing Director and Restaurant Analyst, is joining us now. Peter, this deal caught our eye that Chipotle is planning to expand there. How big a growth opportunity do you think that this is?
Yeah, great. So thanks for having me on. So look, I think this is a great first move to expand into the Middle East for Chipotle, kind of their first major deal in going international. Look, they've got over 3,000 restaurants here in the U.S. There's really no reason, based on what we've seen from other restaurant operators, why an international markets in total can't be the same size as the domestic business. I think they have aspirations in the U.S. to get to 7,000 units. My sense is that international over time, many, many years out, could be just as large as the domestic business. So think in total, I would think, you're probably 14, 15,000 units in total if they eventually get to their aspirational goal of getting to around 7,000 units here in the U.S.
And Peter, what are you expecting for Chipotle heading into its earnings? I know they're out next week. I believe it's next week. What are you looking for from Chipotle?
Look, I think we're looking for continued momentum, especially on the traffic side. They had some positive traffic last quarter, and that's what you saw really drive this stock materially higher. I think the unit development continues to be solid in that 250, 260 units a year. My sense is that most of the development that they're going to have this year is going to come from the Chipotles, which are higher volume, higher margin locations. What I think investors should really start to focus their attention on really is the restaurant level margins here for Chipotle. We believe that we're starting to see some moderation in commodity prices, and I think Chipotle should start to see that on the margins, with margins outperforming, especially if they have some positive traffic that they can get some leverage on. So we're seeing some improvements on the commodity side. We're also seeing a lot of improvements on labor availability and retention, which I think is also another hidden gem that can really drive the margins higher for Chipotle.
Peter, speaking of those margins, though, and speaking of high volume, there's also a report in the in the Wall Street Journal that Chipotle is also refocusing its attention on smaller towns, right? Lower size markets. And that would imply maybe they're not going to get that same traffic there. Do you think that's a good strategy?
Yeah, look, I think most of their development is coming with Chipotlanes, which are going into more existing markets. So they're dipping their toe into some of these smaller markets. We've heard that from several other operators as well. Look, if you want to grow and you want to be a national brand, you got to go into a lot of these smaller markets. I think they're going to cherry pick some of the best locations, but in total, I do think the majority of their restaurant development is going to be in larger markets with Chipotlanes that can sustain higher volume. So I don't see this as a risk. I see this as just another leg to the growth strategy going forward.
Peter, let's pivot to pizza. You're a fan of DPZ, and you set a price target on it for $4.65. What's your case for this?
Yeah, so we raised our price target this morning. We raised our estimates. We're about $1 above consensus estimates for 2024. We believe that same-store sales can accelerate into the mid-single-digit range on the heels of the Uber Eats partnership that they just announced and will launch later this year. Again, look, a mid-single-digit comp benefit, and I think in this environment will drive a lot of their delivery sales. In addition, we're also seeing, like we just mentioned, we're seeing commodities coming in, primarily cheese. Cheese is down around 25%. So far this year, and that is the bulk of their commodity basket. It's about 30-35% of their commodity basket. We're also seeing improvements in labor availability in terms of driver availability, which they did not have last year. Last year, they were closing stores early, opening later because they couldn't fill the driver position. This year, they don't have that problem, so they should have more operating hours as well. So when you put all that together, I think franchisee economics are improving. That's going to drive accelerated development, and I think that will drive the shares higher.
And do you think when it comes to Domino's that they're really outplaying the competitors as well? I mean, their share price is up this year, but it's not crazy up. But if you look at some of the other pizza stocks, they have done worse.
Yeah, look, I think when you look at Domino's, I think you got to compare them, yes, to other pizza names, but you also got to compare them to other large cap names. If you look at the large cap restaurant operators, McDonald's, Yum, Chipotle, Darden, they're all at or near all-time highs. Domino's is about 40% off of its all-time high. I still think, in our view, with this inflection that we think is coming over the next couple of quarters, we do believe that this stock can inflect higher and move in line with the rest of the peer group back up towards those all-time highs. So I think there's a lot more room for this stock to run. We're pretty confident that, as same-store sales improve, you'll see that the profitability of the franchisees improve as well.
But Peter, can comps hold up if there is, I know there have been reductions in forecasts of a recession. Can the comps still hold up in the face of that?
Well, I would say in an environment of a recession, I think pizza is probably the better place to be. You can feed a family of four for $30, $35. Can't really do that with any of the other brands. Mm-hmm. So look, in a recessionary environment that's driven by consumer demand going down, it's not good for anybody. It's not good for any of these restaurants. But I think pizza will perform relatively better only because it's a cheaper, more value-oriented category.
Everyone loves pizza. Mm-hmm. That's the bottom line. Peter Saleh, it's always good to see you, BTIG Managing Director and Restaurant Analyst. Thanks, Peter.
Thank you.